Hello, this is John Pohly, and we have another webinar for you today. The topic today is Stop Foreclosure. Consider your alternatives. I have a special guest today, but before I get to that, just a little bit of my background. I've been in the world of real estate for over a decade. I've done many transactions, but the state of the market right now, we're seeing more and more distressed homes. And that's why I wanted to bring RC Cutcher on the line. He is a distressed property specialist. RC, are you there?
Yes, hi John. Good afternoon.
Thanks for joining us today. Could you give us a little bit of your background with the distressed properties?
John, I am the sponsoring broker of Texas Landmark Properties. It's a real estate company located in Austin, Texas, but we are a company that reaches out to distressed property owners anywhere in the state of Texas to help them avoid foreclosure. I have a team of specialists that work specifically with the banks. That's what they do all day long, and I work with the homeowners, talking to them about various issues that affect them, especially in the marketing of their home.
It's really a different ballgame, isn't it, RC?
It really has changed. I've been in real estate 17 years. And 4 years ago, we began to see that this was not just happening to a few people, but was just happening to a major segment of the market. And, you know, folks need to get on with their lives, and a lot of that has to do with trying to decide what to do when you lose a job or you're involved in, unfortunately, a divorce or a change of job situation, and once you start missing those payments, then there are some very good options that you're going to need to consider to take.
Really, what you said there, you really touched on two of the definitions. Mortgage default, when you're falling behind even a couple of payments, that's considered mortgage default at that point. And then you also touched on hardship too, and we'll go into a little more detail on that. You mentioned a few cases of hardship there. But something
Right.
we've all heard about foreclosure. Could you tell us a little bit about short sales?
Yes, a short sale it can be understood really in two ways. You can have something unfortunate happen to your finances and still have money in the bank and do a short sale. You don't have to be absolutely insolvent to prove a hardship. What the lenders are facing these days in 2012 is they don't want these properties back, and so the property itself becomes the hardship. A short sale is just giving the property back to the bank along with a contract buyer who's willing to pay for your property at the price that the bank and the market has established. And so when that contract comes in, there's a shortage there that's less than the note, and so that's why it's called the short sale.
And I know that there are some options, but we talked just before the webinar. You said a couple of these are very small, does not happen too often. Could you talk a little bit about what a forbearance agreement is and the likelihood of that happening?
Sure. In fact, my wife and I, in 1993, actually, well, we were in the middle of a job change and weren't able to make our payments, and so a forbearance is really when something happens to you financially that's usually a temporary period of time when you've lost a job and you know that you're going to get another one, and it usually occurs in a more of an upbeat market than we have right now. But if you're in a situation where you think you can cure your financial situation within 2 to 3 or 4 months, there's a possibility the bank will just let you stop making payments and start up again in 3 or 4 months. It's pretty rare these days, but that's what they're talking about when they talk about a forbearance agreement or workout program. Used to be more available than it is today, but we got just hundreds of files hitting these banks every day, and so more of an option of the short sale is something that customers should consider. Along with loan modification, you and I talked a little bit about loan modification this week, John, and you can apply for a loan modification with your bank, and that is you're going to lower your interest rate and lower your payment. Sometimes it's not enough, and a lot of those loan modifications have come back where our homeowners have just not been able to solve it through the avenue of loan modification.
And just a quick question on that. Does that increase closing cost again? Does that increase the outstanding loan balance even though it's a restructure?
Well, it can. There's lots of different avenues it can go. It's certainly not going to change the value of your property, so it might cause you to be in your property longer. But you need to talk to a professional and talk to your bank. What loan modification really has become in 2012 is a way that the lender can step up their collection methods, and so there's two different avenues of it. One is just a trial loan modification that's put in place, and unfortunately that has a failure rate according to the lenders of about 95%. And then there's a lengthy loan modification called a recast, and that has about a 42% chance of success. So loan modification is something that you need to think about. Talk to your people that give you financial advice, and if you can stay in the home through loan modification, that would be a good choice.
And RC, I hope we have some better stats for deed in lieu of foreclosure. Could you explain how that works into a distressed property?
Yeah, a deed in lieu of foreclosure is simply basically mailing your keys in and giving your house back to the lender, and you'll want to do that if you've got equity in your property. The bank can certainly render that property as long as their equity is in the property, but you need to talk to a professional, especially a realtor who can give you values in your neighborhood, your subdivision, and let you know if there's a possibility that there's equity in the property. If you don't have equity in the property, it would be very rare that the bank would accept that property back as a deed in lieu. They basically want you to either sell your property on the retail market or do a short sale.
Okay. Well, that short sale is looking better and better, RC, especially when you compare it to foreclosure. I know the common question that I get when I get the calls from a distressed homeowner, what's the better scenario for their credit?
Well, it is somewhat difficult to forecast a foreclosure because it has the same type of explosion on your credit as does bankruptcy. Most lenders are going to try to drag out that crystal ball and say that within 5 to 7 years you're going to be able to repurchase again if you have a bankruptcy or if you have a foreclosure. However, a short sale renders everything completed. You can start over again, and through Fannie Mae guidelines, you should be able to repurchase between 18 and 24 months. You'll be back in the market, and you'll be available as a home purchaser because the short sale brings everything to a close, and you start over again, whereas a foreclosure is sort of like a bleeding wound that stays on your record for a long, long time. And so there are other reasons and options that you should consider a short sale, but that's the main one. You can certainly start over and build your credit back and be back in the market within 18 to 24 months.
And RC, I know we've had some lengthy conversations on short sell and the way that you market a short sell. Could you give some of your experience on the outstanding financial liability of a short sell versus what you've heard with those that go the route of foreclosure?
Well, you're going to have to pinpoint the question a little bit better for me to.
Would you say that there's less financial liability with short sell being marketed rather than a foreclosure where the bank owns it and they're just accepting offers based on what's coming in?
Well, you certainly can usually get a short sale at a better price than an REO or a foreclosure. Here's what happens when the bank is trying to get the average homeowner to short sell their property. They don't use an appraisal unless it's a VA or an FHA loan. On a conventional loan, they're going to go into a neighborhood and use the comps that are the sold in the last 6 months and came in the lowest on the price per square footage. So what is a little bit surprising to a lot of homeowners is that if they have a number of homes in their neighborhood that have sold as short sales and foreclosures, that's the comp that the lender is going to use usually for their property, unless there's some really outrageous upgrades. So they're going to be able to short sell their home, get it back to the lender. It's what's called a what does it take to sell this property in 30 days type of BPO rate.
And
So
real quickly, a BPO is could you explain that terminology?
Sure. A realtor like myself is going to go out into the marketplace for the lender and is going to give back comparable marketing stats on the lower end for the homeowner to be able to sell their home at a reduced rate. There's no there's actually no gain that the seller can have in a short sale. You're not going to be able to walk away from a short sale making money. But at the same time, a short sale should not cost the homeowner anything. It shouldn't cost you anything to list and sell your property for the entire duration working with a short sale team.
That's a very important statement. I know you've mentioned there's no cost up front, but you're saying there's no cost, money out of pocket, basically for that seller at the transaction table.
That's correct. There shouldn't be any cost for that seller to list their property on the multiple listing service and sell it. The realtors involved are going to be paid by the lender. They're not working for the lender, but they're going to be working for the buyer and also the seller. But when the property does close, the lender is going to appropriate the commissions to pay for the sales agent. So there's no cost to the homeowner.
And I know you can't make guarantees with any of this, but could you just tell me from your experience when someone does choose the route of a short sell? When we get those calls, typically they're a couple months behind on their mortgage payments. Does that mean they have to get out of the house right away, or what does the time frame look like when they have to vacate that house?
Well, they need to start talking to folks like us who do this every day and other professionals and not abandon their home when you get that notice of default because in Texas you still have almost 2 months after the notice of default before the real serious notes start coming from the bank, and the bank can foreclose within about 60 days in the state of Texas. But if you reach out to a short sale team, a short sale specialist, and you let the lender know that your target goal is a short sale or loan modification, generally the lender is going to expand that time frame to several months that you stay in your property. Usually at that time you're not making payments because you get behind and you're not able to make those payments. And usually within 4 to 6 to 7 months the short sale is finished up and closed, you've got your new buyer coming in, and you've got your homeowner staying in that property anywhere from 4 to 7 months after they've indicated to the lender that they've missed their payments.
That's great advice. And it's really goes back to what you said at the beginning of the call today. Banks are not in the business of owning homes. They don't want to have those homes come back to them.
Right. They really do want to work with you, but they don't. They're not the person who's going to put all this plan together for you. They're just not set up at the bank level to market your home or to take charge of trying to make decisions as to how you should proceed in stopping your foreclosure.
I saw a recent statistic that said 1 out of 250 people in the U.S., they're actually a real estate agent. When it comes to short sales, what is your recommendation? If they have a friend or a family member who is in real estate, is that their best option?
Well, they need to talk to a short sale specialist who actually has a team of people that is working with the bank. John, I did short sales myself up until about 4 years ago, and then I realized that the people who actually do the negotiating with the lender, that is a specialty field, and you need to find a team in your area, in your city, or a team like ours that works statewide that has people working with the banks every single day that you can ask questions, and you know that it's not just a realtor that you're working with a bank negotiator who is representing you and talking to your lender, your bank, and solving these problems. The average realtor in the United States will close about 25% of their short sales. A real estate team that specializes in it is going to close anywhere from 80 to 90% of their short sales. So you do have a very excellent chance of getting your property, getting it sold as a short sale, getting started over, and repurchasing another property in about 18 to 24 months.
And I like to give the analogy, this is not like going to court and then you can call a mistrial because your attorney didn't represent you correctly. It really is one shot to succeed, isn't it, RC?
Well, it pretty much is, John. Some of the banks, some of the lenders are a little bit more aggressive about that notice of default and notice of foreclosure, and some of the others will let you stay in your property a lot longer. But if you don't have someone that is on the phone several times a week working your file, then you're kind of flying blind as to what's going to happen to you in that property. And if you start working with a group, you're going to have the confidence that you're going to be in your home quite a few more months than you thought you were, and you know exactly what's happening on your side of the table. And that's the reason most people are looking at the option of short sale very, very carefully and very closely.
That's a great point. And these are just the highlights we've spoken about, but I'd really like you to just give an overview of what happens when someone reaches out to us, maybe even on this webinar, and they contact us. Could you tell us a little bit about that first meeting that you have, the first phone interview that you have with them, RC?
Yeah, what we'll do is we'll schedule a free consultation, and we usually, if it's not in person, it is by phone, and you want to have all the people that are going to help you with trying to answer some of these questions about what direction that you should take. And so there might be 2 people in the room, there might be 4 or 5 people that you reach out to, and we'll try to answer all the questions that you have about the marketing of your property, because there's a few strategies that you need to think about. that are going to be used as a short sale property, and then you do have an opportunity to get on the phone and talk to your actual negotiator who's going to be helping you negotiate this with the lender. So if you have any questions either about the marketing or about the bank negotiating, we want to try to get all of your questions answered, because we really do want you to make the best choice to stay in your home or to go ahead and leave that home and get into a better situation.
And just to recap, there's no cost up front, out of pocket. There's no cost at the closing table, out of pocket typically. And this is a free consultation, no obligation to go from there. And we do know that not everyone that you talk to, RC, is going to choose. Maybe they're not in the right time where they need that, but I hope from every call that they walk away with a little bit more knowledge and education on what's happening to them. But there are some other things they can do, even if they don't choose our services. If you want to talk about that, the attorney and the accountant, RC?
Well, sure. You can certainly benefit from our experience of working with lots and lots of homeowners all over the state of Texas who have been in all kinds of different situations in properties, and the short sale is not going to solve every single one of these circumstances, but we'll sure let you know if we think that your best a person to talk to next would either be an attorney or would be a CPA to find out the impact on your credit, or to visit with a potential person who would like to lease your property. We just go into a lot of different options based on your particular circumstance, and then we also give you some good information about the families that we've worked with either in your area or who are currently working with your particular lender.
And I just want to, you made the point earlier, probably the worst thing that could happen is they hide from the mortgage company. Why is it important to stay in contact with the mortgage company once they start falling behind?
Well, when you sign your paperwork when you bought your property, you indicated that you would take care of it and that you would stay there. And once you leave that property and abandon it, they can come in and winterize the property, change the locks, and foreclose on that property quicker than had you stayed in the property, and normally they will. So usually the best situation for most homeowners is to stay in the property, stay in touch with your lender, reach out to some professionals who are involved in this kind of work, and let us work you through it. Otherwise, you're not sure when the lender is going to come in and foreclose on your property, and that's not a good feeling, to not know when these things are going to happen. Normally, when we work with a homeowner, they get to stay quite a few more months and build up their assets so that when it's time to move, they move on your schedule, not the lender's schedule.
Very good advice, RC. For those that do want to take the next step, you can call 1-800-805-7055. That is a toll-free number. On the voice menu system, just click for Avoid Foreclosure. You'll be in touch with RC Cutcher very soon. And again, it's a free consultation, no obligation to list the home for sale. But I really feel, and I hope you get this from this short webinar today, just talking to the wealth of knowledge from RC Cutcher, you're going to feel a lot better after that phone call. At the very least, you'd have an action plan. Hopefully that's an action plan with RC Cutcher to help you with the short sale, but by all means, take advantage of that free consultation. RC, did you have any parting thoughts to our audience today?
Well, we're involved with working with lots of homeowners, and we would love to have a chance to partner with you to go through this rather difficult situation to make it as pain-free as we can, and we believe that we've done that with most of our clients, most of our customers. We're going to get you past this and get on with your next property. Thank you, John.
RC, thank you so much for your time today, and thank you everyone in the audience today and visitors to the website in the future. Please reach out to us if you are going through one of these situations, and we'd love to help you. Thanks again.